Welcome to this tutorial on comparing the Russell 2000 and S&P 500 mutual funds to determine which one performs better and which one you should invest in. To begin with, it is essential to understand what these two indices represent. The Russell 2000 is a small-cap stock market index that represents the bottom 2,000 stocks in the Russell 3000 index, which itself is a comprehensive index of the 3,000 largest publicly traded companies in the U.S. On the other hand, the S&P 500 is a large-cap stock market index that represents the 500 largest publicly traded companies in the U.S. In terms of investment goals, the Russell 2000 is often used by investors seeking higher growth potential, albeit at a higher risk level, while the S&P 500 is often used by investors seeking stable and long-term growth. Now, let's compare the performance of these two indices. Historically, the Russell 2000 has outperformed the S&P 500 during certain periods, particularly during times of economic expansion. However, the S&P 500 has generally been less volatile and has provided more stable returns over the long term. To illustrate this, consider an example where an investor invests $10,000 in the Russell 2000 and another $10,000 in the S&P 500 over a 10-year period. Assuming the Russell 2000 returns an average annual return of 10% and the S&P 500 returns an average annual return of 8%, the investor would have approximately $25,937 in the Russell 2000 and approximately $21,455 in the S&P 500 after 10 years. In conclusion, the choice between investing in the Russell 2000 and the S&P 500 depends on your individual investment goals and risk tolerance. If you are seeking higher growth potential and are willing to take on more risk, the Russell 2000 may be the better choice. However, if you are seeking stable and long-term growth with lower risk, the S&P 500 may be the better choice. It is essential to conduct thorough research and consider your overall financial situation before making any investment decisions. Diversification is also key, and it may be beneficial to consider a combination of both indices to achieve a balanced investment portfolio.